Mr. Umarji, what do you think about this entire transaction? A lot of speculation which is going around in the market. What do you think why Shriram is entering into a merger with IDFC?
See, Shriram Transport as a non-banking finance company has an expertise in retail lending. But as far as the funds required for that lending activity is concerned, there are numerous restrictions on NBFCs taking deposits from public. They are not like banks, so there are restrictions on the extent of deposits that they can take. If they merge with a bank, then there will be no restrictions on funds availability will be there because you will have freedom to take deposits from public. And the other aspect is that the NBFCs engaged in retail finance have an expertise in retail lending. And even today, they are borrowing money from banks and on lend to retail finance for vehicles and other small loans. And they also have an expertise in recovery of loans from in such retail cases, actually. And the rate of default and the NPA percentages in some of these very good NBFCs are very low. So it is a win-win situation for both sides. The bank gets a portfolio which is with so much retail lending portfolio, and the NBFC gets the benefit of source of funds for public deposits.
Okay, but what's your sense in the overall structure of this deal? Looks pretty complex in terms of the finance business as well as the transport business going into bank and the other business going into limited. Do you think this is the best structure that could have been there, or do you expect a lot of challenges ahead given the structure?
Structure and all that, you see, I'm not aware exactly what they are following. But if it is a merger of NBFC and bank, then the NBFC entire loan portfolio will be available to the bank, and the bank source of funds will be available to NBFC, the deposit raising capability.
Okay.
And you definitely get a benefit of the presence in various parts of the country where Shriram Transport is operating. Their offices can get converted into branches of the bank. And the deposit raising can be done in those at branch level.
Mr. Umarji, I have a question for you. Do you think that the cost of funds for an NBFC, as they compete going ahead with banks, the cost of funds will remain on a higher side? Because in this entire equation, I presume that people want to go for lower cost of funds going ahead, and hence maybe a bank.
Yeah, that's the object of doing this merger, that their cost of funds will go down. Because otherwise, they are required to pay a little higher interest if they take deposits as compared to the banks, so that they can attract depositors to come and deposit money.
But the NBFC model, don't you think could survive based on what they're doing right now, based on whatever cost of funds it is right now?
Yeah, it will survive. Actually, there is most of the NBFCs are operating on the same basis and having very good retail business. Actually, there are so many NBFCs who are operating. In fact, the other factor perhaps contributing to this is that the delays in taking decisions in banks actually on giving of loans. Actually, as compared to that, the NBFC is faster. And the retail lenders are getting funds, loans sanctioned quicker than what happens in a bank, perhaps. It may be particularly so in case of public sector banks. It may be that private sector are competing with the NBFC in retail lending. But the expertise of lending to retail sector and having an expertise of recovery of those loans from the retail borrowers is available with NBFC.
Okay.